Happy Monday, everyone. For today's daily analysis, 19 August 2024, and we are going to talk about the gold, oil, WTI, and the currency pairs AUD/USD. So for the dollar index, last week the US dollar dropped from 103 to 102.4 by the weekend. The index struggled to recover midweek due to ongoing selling pressure. Many investors are expecting the Fed Reserve to cut interest rates starting in September, though expectations of a sharp cuts have decreased. A week ago, there was 51% chance of 50 basis point rate cut, but now it's down to 29.5%. This speculation has also pushed down the bond yields, with the 10-year and Treasury yield falling to around 3.91%. Federal Reserve officials have acknowledged that the rate cuts might be necessary due to the growing risk in the labor market. On the daily chart, the US dollar index dipped to 102.4, nearing the lower boundary of the upward trend channel at 102.10. The index is forming lowers, highs, and lows, indicating a bearish trend. The 9-day moving average at 102.91 points to continued weakness, and the 14-day RSI is between 30 and 40, suggesting strong downward momentum. The key support levels are at 102.16, 102.10, and 102. If these levels are breached, the index could fall to 101.34. On the upside, resistance levels are at 102.85 and 103, with the next target at 103.57. And then last week, our WTI crude oil jumped to a near-month high of $80.40, supported by geopolitical tensions involving in Iran. The uncertainty led to increased tradings as investors look for protection against the price spikes. However, concerns are slowly global demand, especially from China, pull back to $76 by the end of the week. China's economic slowdown, particularly in factory and refinery output, has impacted the oil demand. The IEA and OPEC have both lowered their demand forecast for 2024-2025 due to China's weaker economy. While geopolitical risks and hopes for the US interest rates cuts have supported prices, concerns about the global demand continue to weigh on the market. Technically, the WTI oil prices struggle to hold above the key 200-day moving average at the $78.12, retreating from the high of $80.40 to around $76. If the price drops further, it could fall to $75 and then to the next support level at $73.45. On the upside, resistance is at $78.12, and if the price breaks through that, it could retest at $80.40 and aim for $81.75. And then for gold, reach a new time all high of $2,510, despite initially struggling to gain momentum. The upcoming release of US macroeconomic and Fed Jerome Powell speech could influence gold next move. After a rebound later in the week, gold closed above $2,470 on Monday, supported by a drop in the US Treasury yields and ongoing geopolitical tensions, particularly concerning Iran. However, midweek, gold lost some gains as expectations of a major rate cuts diminished. Despite some positive US economic data favoring a smaller cut in September, gold managed to retain momentum and hit a record high of $2,510. On the technical side, the 14-day RSI remains above 65, signaling that the bullish trend is still going strong. If the gold continues to rise, it could face resistance at $2,514, and if it breaks through, the next target would be at $2,548.9, with a potential reach at $2,600. However, if gold is to experience pullback, the first support level is $2,489, and further support levels are at $2,450.8, $2,442.3, and psychological level of $2,400. Last week, the AUD-USD pair rebounded gaining 1.49% and closing around 0.6667. This rise was influenced by mixed U.S. sentiment data and comments from the Reserve Bank of Australia Governor Michelle Bullock. Despite economic uncertainties and rising inflation, the RBA remains hawkish, leading the market to expect only a 25 basis point rate cuts in 2024. This has boosted interest in the Australian dollar. Australia employment report for July showed 58,200 new jobs, much higher than expected to 20,000, though the unemployment rate rose slightly to 4.2%, above the expected 4.1%. Consumer inflation expectations also increased to 4.5% in August from 4.3% in July. The RBA is expected to be one of the last central banks to cut rates, which has kept the market sentiment positive for the AUD. Additionally, stronger global stock markets help support the AUD-USD, even with the rising demand for the US dollar after a strong US data. Technically, the currency pair is showing bullish momentum with large fluctuations on the daily chart. The MACD indicator confirms with the rising green bars, and the 14-day RSI is holding around 59.5, signaling a bullish trend. The pair is in a golden cross formation between the 9-day and 150-day moving averages, which is a positive sign. Key resistance levels this week are at 0.67 and 0.6701, with a break above these levels potentially leading to 0.6755 and 0.68. On the downside, support is at 0.6625, with a further support at 0.66 and 0.6572. A breakout in either direction could indicate a stronger move in that direction. And that is all for today's daily analysis. Thank you for watching and happy trading.